Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 4 strong buy dividend stocks to consider for 2022. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're talking dividend stocks, specifically 4 stocks that all come in with a strong buy consensus from analysts, and they think they have some great growth potential for this coming year. So in today's video, we're going to take a look at these companies, what it is that they do, what they pay for dividends, and how analysts are weighing in on their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, let's jump right into these strong buy dividend stocks. First on our list today is a company called Enterprise Products Partners. Their stock trades under the ticker EPD and is currently priced at $21.68 per share. Enterprise Products pays a quarterly dividend of 45 cents per share. This comes out to a dividend yield of 8.37%, which is huge compared to the sector average of just 1.34%. Their last dividend payment was on November 11th, so the next should be coming up in February of 2022. Enterprise Product Partners is one of the largest publicly traded energy partnerships. They have approximately 50,000 miles of different pipelines with 19 natural gas processing facilities, 25 fractionators, 11 condensate distillation facilities, a PDH facility, and an IBDH facility. With a market capitalization of about $50 billion, they've seen an average return on invested capital of 12% over the past 10 years, and they've seen 23 consecutive years of distribution increases. Along with those distribution increases, they've returned $41.8 billion of capital to equity investors via distributions and share buybacks. The EPD stock currently has 8 analyst ratings and comes in as a strong buy based off of 7 buy ratings and just 1 hold. With that strong buy rating comes an average price target of $28.38, which would be an upside potential of nearly 31% for this next year. Taking a look at our detailed list of analyst forecasts, on the low end we do have our hold rating from 2 months ago with still an upside of about 10.5%. Several ratings come in around the 33% mark, and on the high end we have a $32 price target from RBC, which would be an upside potential of 47%. Second on our list today, we have Fidelity National Financial. Their stock trades under the ticker FNF and is currently priced at $51.84 per share. FNF pays a quarterly dividend of 44 cents per share. That works out to a dividend yield of 3.06%, once again well ahead of the sector average. Their next payment date is coming up December 30th, so the next will then be expected in March of 2022. FNF deals with title insurance and transaction services for the real estate and mortgage industries. Their 4 primary operating segments include title insurance, mortgage and real estate services, real estate technology, and annuities and life insurance. They are the nation's largest title insurance and settlement services company and the most diversified competitor from geographic, product, and revenue channel perspective. On the annuity and life insurance side, they're in the top 5 fixed index annuity writers in the industry. They are the number 1 in market share for the residential purchase, refinance, and commercial markets, and they hold the number 1 or 2 market position in 42 different states. On the balance sheet, they have $58.5 billion and cash and investments of $45.4 billion with total debt of $3.1 billion. Over the last 10 years, they've had $2.6 billion in dividends paid and $1.6 billion in shares repurchased. The FNF stock does just have 3 current analyst ratings, but they come in with unanimous buys. Their average price target comes in at $66.67 for an upside potential of over 28%. And most of those price targets are fairly close together, ranging from a low end of 25% to a high end of 33%. Third on our list today, we have Innovative Industrial Properties. Their stock trades under the ticker IIPR, currently priced at $262 per share. Innovative Industrial Properties is a REIT, or Real Estate Investment Trust. This means that they must distribute at least 90% of their taxable income in the form of a dividend. That dividend is paid quarterly at $1.50 per share for a dividend yield of 2.28%. Their next ex-dividend is coming out tomorrow on December 29th for payment on January 13th. Innovative Industrial Properties was the very first publicly traded company on the New York Stock Exchange to provide real estate capital to the medical use cannabis industry. They are primarily known for buying industrial facilities for growing and processing cannabis in U.S. states where medical marijuana is legal. With $1.7 billion in committed or invested capital, they now have 103 properties across 19 states for a total of 7.7 million square feet. With 100% of their available portfolio being leased, their current average lease length is over 16 years. And of course, the medical cannabis industry is rapidly growing. As of December last year, 36 U.S. states had legalized cannabis for medical use. Regulated cannabis sales in the U.S. grew to an estimated $20.1 billion in 2020, and they're expected to grow to over $45.9 billion by 2025. The company has been consistently increasing their dividend since initiating payments shortly after the company was founded back in 2016. The IIPR stock currently has 4 analyst ratings, and once again we have unanimous buys. The average price target comes in at $295 per share, which would be a growth potential of 12.5%. We have a couple price targets at the $290 price target for just shy of an 11% upside, and a couple at $300, which would be growth of nearly 15%. And our fourth dividend-paying stock today is EOG Resources. Their stock trades under the ticker EOG and is currently priced just shy of $90 per share. They pay a quarterly dividend of 75 cents per share, and you can see the company also pays special dividends, with the most recent coming out in December. Their current yield comes out at 5.72%, and the next ex-dividend date is coming up on January 12th. EOG Resources is one of the largest crude oil and natural gas exploration and production companies in the United States, with proved reserves in the United States, Trinidad, and China. They strive to maintain the lowest possible operating cost structure that is consistent with robust environmental stewardship practices and performance and efficient, safe operations. They're focused on being among the lowest cost, highest return, and lowest emissions producer, playing a significant role in the long-term future of energy. In 2021, they returned $2.7 billion to shareholders and saw an 82% increase to their regular dividend. They've had 22 years of a stable and growing dividend, and over the last 5 years have seen a 28% compound annual growth rate. EOG has the most analyst coverage today, with 19 current ratings, and they come in as a strong buy based on 16 buy ratings and 3 holds. With that rating comes a $115 price target, which would be growth potential of 28%. Looking at the most recent ratings, we do have a low-end price target of $107, which would still be upside potential of over 19%. On the high end, we have a $130 price target, which would be an upside of 45%. So there we have 4 strong buy dividend stocks that analysts think have some double-digit upside potential. Now, you guys know I always love hearing from you, and there are a ton of fantastic dividend-paying companies out there. So let me know your thoughts in the comments down below, what you think of these 4 stocks, and what are some of your favorite dividend-paying companies for 2022. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. And please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Make sure you're always doing your own research and due diligence before making any investment decision. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.